Hey everyone, financial sector in India is getting disrupted big time. Especially there is a huge disruption in the digital payment ecosystem. From being a cash-driven economy to a stage where today even your nearby local kirana shop is accepting digital payment, India has come a long way. So today I want to cover the business prospect of a company that is a dominant player in Indian credit card market. It's SBI Card, the only pure play listed credit card company in India. I was looking at the shareholding pattern of SBI Card and I was surprised to see that DIIs have constantly increased their shareholding in SBI Card since last 8 quarters. Yes, in last 8 quarters, DIIs have constantly increased their shareholding in SBI Card from 3.23% in September 20 to 16.24% in last June quarter. So there must be something interesting with SBI Card, isn't it? When SBI Card launched its IPO during 2020, just before COVID, its biggest selling point was the untapped potential in the Indian credit card market. During that time, some reports mentioned that the credit card users in India were 3 out of every 100 people, whereas in US, there were 32 credit card users out of every 100 people. So India had a potential to grow more than 10 times. In fact, credit card industry was expected to grow at 25% CAGR between 2020 to 25. There were multiple factors including rise of e-commerce sector where people prefer using online payment. Then India has a young population which is increasingly using credit cards, and of course there was a big shift from saving to consumption where people started going out and spending money, be it buying expensive smartphone or spending more and more money on travel and eating out. So everyone expected that as Indian economy accept more and more digital payment, debit card and credit card industry would grow exponentially. And a pure play credit card company like SBI Card was looking very attractive. But it was not easy for SBI Card to grow exponentially. There was one big threat, UPI payment. Launched in 2016, UPI payment quickly became a popular choice for sending and receiving money. The popularity of UPI payment can be gauged from the fact that since it's launched in 2016, UPI payments have grown from 5 billion transactions in FY19 to 46 billion transactions in FY22, growing at 9 times in last 3 years. Crazy, isn't it? In Q1 of FY22, UPI payment clocked over 14.55 billion transactions in volume and 26.19 trillion rupee in terms of value. All that happened just within 6 years of launch of UPI. The impact of UPI is so big that today even the fruits and vegetable vendors accept UPI payment. Just to give you a comparative idea between credit card and UPI payment, in January 22, the share of credit card in retail digital payment stood at less than 2%, whereas UPI share in retail digital payment stood at 18%. The question is why? Why credit card industry that was looking very attractive struggled to grow, whereas UPI payment grew exponentially since its launch in 2016? I'll explain the reason in this video. Due to this growing uncertainty in growth for credit card, SBI Card share price also struggled to grow. SBI Card launched its IPO in 2020 at 755 and quickly jumped to levels of 1000, but it tanked badly during COVID to levels of 500. However, it again recovered and touched a high of 1165, but then it tanked 40% to levels of 655 in June month. However, in last 1 month, the stock is up nearly 20% and trading at levels of 940. So what happened overnight that resulted in sharp jump in SBI Card share price? And the question is this rally sustainable? I'll try to answer it in this video. But before we proceed, it's time for the quiz. This company is a leading Indian manufacturer of tires, but it doesn't make normal tires. It makes off-highway tires for application in agriculture, construction, mining, etc. with business in over 160 countries. Currently, company has a market cap of 45,000 crore. Can you guess the name? Well, put it in the comments. I'll disclose the name at the end of the video. Alright, now let's move on to SBI Card. But remember, this video is only for educational purpose. Please do your own research before investing your money. And we also have a partner for this video. It's M-Stock from Mira Asset. Now you can invest in stocks with zero brokerage cost using M-Stock platform from Mira Asset. It has a very unique pricing model where you don't have to pay any brokerage on your delivery trade, intraday, futures and option trading. There's only a one-time fee of Rs 999 and you can make unlimited trade without any brokerage. And if you open a Demat account with M-Stock, you just need to pay a one-time amount of $999 and your demat maintenance would be free for life. So basically you pay a total of rupees 1998 and all your trading is free and your demat maintenance is free for life. This is a great option for those who trade frequently and even for investors who are looking for a low-cost trading account. If you want to explore M stock, I have provided the link in the description. Before you even consider investing in SBI Card, you should understand the overall macro level dynamics in credit card industry in India, which is challenged by UPI payment. The biggest question is, what is the reason behind the exponential growth in UPI payment while credit card sector that was once looking very promising has struggled to grow? The answer lies in their fee structure. Try to understand it carefully. It will also help you understand the business model of credit card industry and UPI industry. The simple reason for exponential growth of UPI payment is they don't charge any fee from merchants, whereas credit card charge a fee in the range of 1.5% to 2%. This fee is also called MDR, that is merchant discount rate. By the way, this fee income constitutes the major revenue for credit card companies. In addition, credit card companies also earn money from interest fee from users. So when you swipe your credit card on the POS device while making the payment, merchants end up paying a fee of 1.5% to 2% to banks and credit card companies. While this 1.5 to 2% fee might sound less, it is very significant, especially for small merchants. On the contrary, UPI charges zero payment fee. This made UPI a big hit in India. Of course, the digital payment got boosted due to demonetization in the past and then due to COVID where people preferred contactless payment over cash payment. And it is very convenient to scan the code and make payment even for a cup of tea worth ₹10, whereas you don't want to swipe your card for that. In fact, majority of small merchants do not even have the POS machine to swipe credit card. Hence, UPI got a major boost from small merchants and looked like it completely dented the credit card growth in India. As a result, even the share price of SBI Card tanked. So intense competition from UPI payment was one of the biggest reasons behind the fall in SBI Card share price. However, it is not that credit card usage has reduced. It is still growing. Because when you want to make an online purchase, credit card gives you the option to buy things on credit even if you don't have the money. And it also gives you the option to buy things on EMI, which is not possible with UPI. And of course, there are a lot of other benefits like reward point on shopping and purchase and other benefits like your free airport lounge access, free movie ticket, etc. On top of that, you also get a good discount on credit card for booking travel tickets, hotel booking, shopping, etc. So credit cards have its own usage, but UPI payment has certainly dented the growth, especially in the small ticket purchase. On top of that, due to COVID, the bad loans of credit card companies jumped significantly. Due to that, SBI Card saw a dip in its profitability. It further dented SBI Card share price. The next reason was the threat from new age fintech companies that are looking to democratize credit payment and came up with various options like wallet payment, buy now, pay later, and so on. Due to all these factors, credit card grew at a relatively slow pace. The total credit card in circulation jumped from 29.8 million in FY17 to 67.6 million by November 21 at 20% CAGR. The growth is still not bad. That shows there is scope for both credit card and UPI payment to flourish. However, recently RBI has made a big announcement. And after this news, SBI Card share price jumped 20% within a month. RBI announced the linkage of UPI with credit card. Till now, only debit cards connected to saving bank account and current account were allowed to link to the UPI platform. So you can't buy anything on credit using UPI payment. However, the new move from RBI could be a big game changer for credit card industry, which was once struggling to grow at high rate. Just imagine, you get an option to do UPI payment on credit. That would be amazing, isn't it? Of course, you won't need the plastic card, but you would still need a digital copy of your credit card to be linked with UPI. And this news was a big boost for SBI Card. Many brokerage houses upgraded their target on SBI Card after this announcement of UPI linkage with credit card. But there is still a big catch while linking credit card with UPI payment. And the catch is that, as we discussed before, credit card companies charge a fee that is MDR from merchants, whereas UPI transactions do not charge any fee. So how will the charges work out post credit card linkage with UPI? Will credit card companies let go of their fee and make it free? Well, I don't think so, because merchant fee is a big source of earning for credit card companies. In that case, will merchants take a hit by paying a fee when you pay via UPI using your credit card? Again, I don't think that merchants would like to pay a fee when they have the normal UPI payment for free. So RBI would have to come up with an agreement with credit card companies on the MDR rate, which is also favorable to the merchants. But that is one big development where SBI Card can benefit from this move by RBI to allow UPI payment on credit. So keep an eye on this development. Last week there was news that credit card linkage with UPI is likely to happen in 2 months, and NPCI is in talks with SBI, Bank of Baroda and few other banks. Now you might ask, what about competition from new age BNPL companies? So of late, BNPL, that is buy now pay later, has been growing significantly with new age fintech companies like Slice, Uni issuing lakhs of cards every month and looking like a big challenger to credit card industry. The sudden rise of BNPL industry is because credit card companies can't issue credit card to a person with earning below 1.44 lakh rupees. So credit cards can't be issued to students or young professionals as they do not have any credit history and they don't have significant earning. But these BNPL companies came up with a model where even a student can buy products by splitting the money in 3 equal parts at 0% EMI. This again looked like a big competitor to credit card sector. But there is again a major development in this space where RBI has stepped in and banned all non-bank prepaid payment instrument, that is PPI issuers like Slice, Uni, etc. from loading credit lines. This is a big blow to these BNPL companies and a positive news for credit card sector. Although credit cards offers wide range of rewards like cashback, air miles, airport lounge access, special discount, etc. Then moreover, you can use credit card in case of an unplanned emergency expense. So there is always a scope for growth for credit card sector. Now, if you look at the performance of SBI Card, its profitability has increased significantly after the COVID crisis. Let us look at its financials. Now first, if you look at the revenue growth of SBI Card on yearly basis, it has grown from 3,347 crore in March 17 to 11,416 crore in trailing 12 months, and look at this consistent growth in the numbers. Although there was a slight dip in March 21 due to COVID, but it has been a consistent growth at a CAGR of 26.3%, which is fantastic. And then if you look at the profit growth, it has grown from 373 crore in March 17 to 1,938 crore in trailing 12 months at a brilliant CAGR of 36.9%. Look at this consistent growth in the profitability. Although there was a slight dip due to COVID, but again the profitability has improved. Next, if you look at the profit growth for last 8 quarters, it was been volatile because of COVID. It fell down sharply, then increased, then again fell down, and it was consistently on the lower side. But then after COVID, look at this. There is a consistent increase in the numbers of profitability. And the latest profit for June 22 quarter stood at 627 crore, which has been the highest so far. Now, if you look at the breakup, its PAT has increased by 106% year on year. And its market share stood at 18.4% in terms of total number of cards, 18.6% in total number of spend, and 18.7% in terms of total number of transaction. Its portfolio has grown by 19% year on year in terms of card, 79% in terms of spend, and 36% in terms of receivable. And its asset quality has stood at NPA at 0.79%. And if you look at the profitability, its return on average assets stood at 7% and return on average equity stood at 30.8%, which is one of the best in the industry. Apart from this, if you look at the total number of cards in force, SBI Card has 1.43 crore cards in force, which has grown by 19%, and its spend has reached to 59,671 crore, which is up 79%. Now, if you look at the share price movement of SBI Card, it is currently trading at levels of 940, and since its IPO, it has been on the sliding trend because of COVID, but then there was a jump, and if you look at last 6 months, year to date, it has been on the falling side. So it fell down almost 27-28%, but since 20th June, it has been on upward trend and already up almost 39%. And in last 1 month, if you see, it is up nearly 20%, and currently at levels of 940, it is trading at a P ratio of 46. Now, if you look at the shareholding pattern in SBI Card, look at this DII shareholding. It was 3.23% in September 20, then increased to 3.9%, then 5.97, then 6.69, then 9.71, then 11.92, then 12.41, then 16.24%. So it has been a consistent increase in the shareholding of DIIs that shows the confidence of DIIs in the company. And if you look at the promoter holding, it has been on the consistent side 16.59%, and currently also it is 69.64%. So basically the public shareholding has decreased from 22.59% to 5.83%. So overall I would conclude that SBI Card is a fundamentally strong company and has bright growth prospects. The reason being immense untapped potential in the credit card sector in India that has just started to grow. India is going to see huge jump in consumption sector and people would continue to buy on credit. We have seen this in US and it will happen in India over the next 20-30 years. Yes, it won't be an easy ride for SBI Card that has seen an intense competition from UPI payment as well as new models like BNPL. However, the value of credit card is still intact, and looking at the immense growth potential, I believe that there is enough scope for growth for credit card sector along with UPI and other payment sector. And considering the fact that SBI Card has a strong parentage of SBI Bank with its huge branch network, even in the rural part of the country, it certainly has an advantage over other players in the sector. So I think that SBI Card at current levels of 940 rupee is looking attractive for accumulation. Especially if the UPI linkage with credit card is finalized, SBI Card could be a big beneficiary from this move. The only problem is that this sector is very dynamic, so you can't predict the short-term movement. But for long-term, I believe the growth prospects are still intact. So any fall in SBI Card would be a buy opportunity in a systematic manner. Now it's time for the quiz. The question was, this company is a leading Indian manufacturer of tires, but it doesn't make normal tires. It makes off-highway tires for application in agriculture, construction, mining, etc. with business in over 160 countries. And company has a current market cap of around 45,000 crore. And the answer is Balkrishna Industries. It has been a leading off-highway tire company for over 30 years. In last 10 years, its share price has jumped from 135 rupee to current levels of 2,350, generating over 15 times return, and the company is still growing at a rapid rate. So this is it for this video. Now tell me in the comments, what do you think about the future prospect of credit card in India? Do you think it's worth adding SBI Card for long-term investment? I hope you will find this video useful. If yes, do like and share the video. Thanks for watching. Take care.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.